Let's have a brief conversation about petty cash. What exactly is petty cash? It is a fund that sits around your business place, which contains small amount of cash depending on the size of the business. This is there for minor expenditures that you would have, like buying stamps, buying printer paper, ink cartridges, if need be. Maybe taking some employees out to lunch for a business meeting. All of these things would be petty cash expenditures, which you could take from your petty cash lockbox at work as long as you document it. But not everybody can do this because that would be a madhouse if everybody in the business could just go and grab money out of this box when they wanted. So certain people are assigned the right to access this box. They are called custodians. They typically have to be trained and have to be authorized by management to be a custodian of the petty cash box. No one that hasn't got the certification, no one that is not an approved custodian is able to access this petty cash box. So what happens is other people come to the custodian and they say, hey, I need $40 to pay for a delivery expense. Can I take it out of petty cash? And the custodian will say, sure. And they'll make them sign a petty cash voucher, which is essentially a document that states the date, the reason for the withdrawal, the amount of the withdrawal, and it's signed by both the person that took it out and the custodian that approved it. This is the way that it should work. I've seen a lot of places that operate petty cash by the custodian hands out the money, the person goes and spends it on whatever they need to spend it on, and when they come back they bring the receipt from their purchase, and then everybody signs off on the actual receipt itself instead of the voucher. Either way works. An important concept for petty cash is called the impressed balance, and what that is the amount that should be in that petty cash box at the start of every period. So someone somewhere, management, probably with the custodians, talking in this as well, are going to say, what amount do we need to start the period with for petty cash? Is it $200? Well, if it is, then our petty cash fund has an impressed balance of $200. It means it starts the period with $200. Expenditures happen during the month, and then at the end of the month you put cash back in the box until it returns to its impressed balance. So if you had a $200 impressed balance, $100 was taken out of petty cash during the month, you would put another $100 back in at the end of the month to bring its balance back to $200. This can't change willy-nilly. It has to, be documented somewhere. This is our impressed balance, and if you want to change it to either increase it or decrease it, put more or less money into petty cash, it has to be approved before that can happen. So for the journal entry, let's say on January 1st, Patterson Pets wants to establish a petty cash fund and they want to have an impressed balance of $200. We need to record the journal entry to set this fund up in the first place. What accounts are we going to use? First one is petty cash. We're going to keep the money that is in petty cash in a separate account from the money that's in our savings account. But that money to go into petty cash has to come from somewhere, so we're probably going to withdraw it from our bank account to put it into petty cash, which means the other account being affected is your regular cash account. They are both assets. The amount of money going into your petty cash lockbox is going to be increasing, while the money in your bank, when you take it out to put it in that lockbox, is going to decrease. So therefore we know petty cash has to be our debit and cash has to be our credit. So for the journal entry, we debit petty cash for $200. We credit cash for $200, and we established our petty cash fund. This entry only needs to be recorded the very, very first time that you establish the fund. Once the fund is on the books at this number, well, then you don't have to worry about this anymore. So this is just the establishment entry. So how do you expense a petty cash fund? It would be crazy if every time somebody took money out of petty cash, we put the journal entry in right there. If somebody took out $40 to go to lunch, put it down as an entertainment expense that day. There's just too much coming and going from the petty cash fund, especially if you're a larger company. It's just not worth it. The way that it's typically done is at the end of the period, the custodian goes in to the petty cash lockbox and records one big compound entry for all the expenditures during the period. So let's take Patterson Pets here. They have three things in their lockbox. They have a receipt from Walmart for $60 worth of office supplies. They have a $20 signed petty cash voucher that paid for a delivery charge. So someone showed up with a package and they said, hey, it's a $20 pay on delivery fee. So they took the money out of petty cash and gave it to the driver. and documented properly with a petty cash voucher, the last thing that's remaining is $118 in cash. And if you think about it, this should make sense, right? The amount of cash that you have left at the end of the period, plus all of the expenses that you documented, the amount withdrawn from the box during the period, should add up to its impressed balance. But it's not always the case. Look in this example at what Patterson has going on. They have $118 in cash remaining. They have a $60 documented expenditure from Walmart. They have a $20 petty cash voucher for this delivery charge. If you add that up, it's $198. But their impressed balance isn't $198. It was $200. We just established it a minute ago, which means something's not in line here. The total amount of cash and expenses that they have is not equal to the impressed balance. This is not an uncommon situation. What do you do in this situation? You're going to use an account called cash short and over. This is essentially a transitional account that is used to return petty cash back to its impressed balance if all of the money that you started the period with isn't accounted for. It always tends to be short. Like, I don't think I've ever actually seen a petty cash box that had too much money left in it at the end of the period. And since it tends to be short, think of it like an expense. It's not actually an expense, but because you're usually typically short, you're going to use this account to make up that missing expense for the money that's not there. So let's record an entry that's going to record our expenditures and replenish our petty cash fund. Well, Patterson Pets, again, fund has a $200 balance. We know about the $60 receipt for office supplies. We know about the $20 voucher for the delivery expense, and we know we have $118 left in cash. Well, at period's end, on the last day, we're going to go and check, and on January 31st, we're going to put those office supplies that we purchased on the books. We're going to record that delivery expense that we incurred and put that on the books. And then I'm going to skip a line for right now because we know the last thing we need to do is replenish our petty cash fund. And to do that, all you're going to do is take your impressed balance and subtract out the cash that you have remaining, because the difference between those two is how much you have to put back into the fund to get to your impressed balance. So our impressed balance was $200. We have $118 in cash remaining, which means we need to put $82 in cash back in the fund. So we're going to credit cash for $82. We know our debits have to equal our credits, and they don't. We got $80 in debits and $82 in credits, which means that we need to use that cash short and over account for whatever makes our debits equal our credits. In this case, it's $2. So we replenished our petty cash fund and recorded all of our expenditures. What happened to the $2? Who knows? Somebody probably took $2 out of petty cash that was authorized to buy a Pepsi from a vending machine or something and didn't document it. It happens where there's a small difference all the time. It's just really hard to keep track of all of your petty cash, and if you do come off, use cash short and over. What happens if you keep running out of petty cash? If your fund just isn't big enough? Well, you need to increase the impressed balance, and this entry looks a whole lot like the entry that we used to establish it in the first place. Our two accounts being affected are still going to be petty cash and cash, because we're going to have to take money out of our bank account to put into the lockbox. They're both assets. If we're going from 200 to 300, the amount of petty cash in our lockbox is going to be going up, while our bank account is going to be going down when we draw the money, which means petty cash is once again our debit, and cash is once again our credit. What do we record the journal entry for? Well, our books say that petty cash has $200, which was our old impressed balance, but we want to go to 300, so we're going to do the difference. So whenever you're increasing or decreasing your petty cash impressed balance, you don't put it in for the target that you're getting to, you're putting it in for the difference between what petty cash is currently on your books for and your new impressed balance. But all in all, the entry, if you're increasing it, is exactly the same as the entry it was to establish it in the first place. So Patterson Pets here on January 1st is going to debit petty cash and credit cash for $100 as they increase the balance of their petty cash fund.